Hello friends, in this video I am going to explain about how can India become the strongest economy in near future. Can India overtake the US and China as the strongest economy? When it comes to the strongest economies in the world, India is starting to change up the focus based on their incredible economic growth over the past decade and their limitless potential for the future. But is it realistic to think that India, which some are still considered to be a developing nation, and could overtake the most dominant country in the world and become the world's top producer anytime in the near future? Today, we will consider this possibility and look at some several factors that will push India in that direction or cause it to fall back. But first, a little background introduction. Since 1871, the USA held the position of largest economy in the world. In 2018, USA crossed a new threshold with a GDP that totaled over 20.5 trillion US dollar. China, on the other hand, is a newer player in the field of large economies, having only claimed the second highest spot in 2010. Their economy significantly trails that of the United States with a GDP in 2018 of 13.4 trillion US dollar. If you travel down further on the list, Japan, Germany, UK and France, you will find India in the 7th place with a GDP of 2 trillion US dollar. Just looking at these numbers on the surface, it seems ridiculous to ask whether could India overtake both the US and China, not to mention other four countries in between to become the strongest economy in the world. But the real story here is found in the economic growth rates. While the economy of the US grew only 2.9% in 2018, China grew by 6.5% and India had the fastest growing economy in the world with a 7.4%. These numbers gain even more significance when you realize that America's 2.9% rate is their highest, while India, on the other hand, has led the world in economic growth rates for several years and is expected to continue to do so in future. Just one glance in this chart shows how consistently India's economy has been growing. But let's now take a look at how the India got to this position and how India became one of the world's top economies. India gained its independence from United Kingdom in 1947 and quickly implemented a closed economy where they focused on providing for the country's need without relying on imports. The major industries including mining, banking, insurance and telecoms were nationalized by mid-50s. When corruption became a problem, the government correctly implementing strict regulations thus stifled economic growth. After widespread poverty, India found itself at a crossroads. 1991 brought the collapse of Soviet Union, one of India's primary trade partner, and the Gulf War raised oil prices high and cut off funds from Indians who had been sending back money while working in the Middle East. These were the main factors that brought India to the brink of financial crisis. The country was in serious danger of defaulting on loans. They were bailed out by the International Monetary Fund with the 1.8 billion US dollar loan under the condition that they will implement major economic reforms. This led to liberalization of India's economy. Their markets were opened up to foreign competitions and restrictions on foreign investments were eliminated. This opened up opportunities for Indian entrepreneurs who get funding from investors around the world. A number of other regulations and restrictions were also eased. In order to stimulate economic growth, tariffs were reduced and monopolies were eliminated. By 2003, India had established a free market economy and its GDP began to grow significantly. Year after year, Indian entrepreneurs embracing the IT sector was a big part of this growth. By 2007, revenues from the IT sector was total 23.5 billion US dollar. In 2018, revenues topped 167 billion US dollar from IT sector alone. The increase in technology-based business will continue to play a vital part in India's economic growth. But now let's see what is working in India's favor. Reasons why India might become largest economy. India's primary asset is its people. With a population of over 1.3 billion people, India comes behind China on the list of world's most populated countries. But there is one important difference between the two countries' population. India's population is generally much younger than China's aging population. In fact, 67% of India's total population are younger than 35. The United Nations expects that India's population to surpass China by 2024. India's current population dynamics contribute to what is referred to as demographic dividend, which is the economic growth potential coming from shift in the working age population. The potential of India's workforce is unrivaled throughout the world due to their sheer and current economic landscape. Another indicator that India's economy is strengthening is the decrease in the poverty rates. Poverty is still a widespread problem in India, with 12.4% of country's population living below the international poverty level, which means they live on less than $1.8 per day. However, between 2005 and 2016, a total of 271 million Indians moved out of poverty. This means the poverty rate was cut in half in this period of about 10 years. Although India has a long way to go in addressing poverty, this trajectory is a positive sign for the strength of India's future economy. Another piece of the puzzle for India's economic growth is increased urbanization. Today, 50% of India's workforce is employed in the agriculture sector, but low wages and decline in land fertility have to gradually drive people from rural areas to seek better opportunities in cities. By 2050, it is expected that over 830 million people will live in India's city centers. According to the World Bank, urbanization spurs economic growth by increasing demand for both urban business and agriculture products, which helps to reduce poverty overall. However, urbanization could have a negative effect if the proper infrastructure is not put in place.